You worked for this. You sacrificed weekends, relationships, sleep. You said no to 100 things so your financial future could say yes. And right now, in 2026, that future is sitting on a fault line, and most people have absolutely no idea. I want you to do something uncomfortable for the next few minutes. I want you to stress test your own wealth, not your income, not your investment portfolio on a good day, your actual architecture. Because there is a difference, a massive life-defining difference between wealth that survives a storm and wealth that simply looks impressive until the storm arrives. I built a 5-question audit, and by the time we're done here, you will know with complete clarity whether your financial house is built on bedrock or glass. Stay with me. Question 5 is the one that changes everything. Welcome to WealthForge. I'm Dr. Ben. This channel exists for one reason, not to hand you a list of stocks to follow, not to give you a hot take on what the Fed said last Tuesday. We are here to build, to architect, to design the kind of financial infrastructure that doesn't need a bull market to survive. Because here at WealthForge, we operate by a single principle. We don't follow the market, we design the moat. In a world full of followers, we are the architects of our own freedom. That's not a motivational poster, that's a strategy. And today, that strategy begins with an honest audit of where you actually stand. 2026 is not a normal year. I want you to sit with that. The post-2024 market surge created an illusion of wealth for millions of people. Numbers looked great on paper. Retirement accounts were fat. Real estate valuations were high. And so people relaxed. They stopped asking the hard questions. That is exactly when fragility is born. So today, we're asking 5 questions that most financial advisors are too polite or too afraid to put in front of you. These aren't academic exercises. Each question represents a real point of failure that I've watched destroy legitimate, significant wealth in less than 90 days. Let's go. Let me give you some context before we get into the questions, because context is the difference between data and wisdom. Right now, global inflation is behaving in a way that central bank models did not predict. We have pockets of deflation in certain asset classes sitting right next to hyperinflationary pressure in essentials, energy, food, insurance, healthcare. That combination is historically very dangerous because it creates a false confidence signal. People see their asset values holding steady and they conclude they're fine. They are not necessarily fine. Here's the definition I need you to hold for this entire conversation. Wealth fragility. It means your net worth looks high on paper, but cannot survive a 15% currency devaluation without you having to sell assets at the worst possible time, take on emergency debt, or restructure your entire lifestyle. For most people, and I mean genuinely intelligent, hard-working, financially aware people, the honest answer is no. And that is why this audit matters. This is not about fear. This is about architecture. Let's begin. Question 1. Can you access a meaningful portion of your capital in under 60 seconds? Not eventually, not in 30 days when your CD matures. Right now, 60 seconds. I'm not asking if you're wealthy. I'm asking if your wealth is accessible. Because there is a brutal distinction between those two things that most people only discover during a crisis, which is the worst possible time to discover anything. Here's what I call the 90-day cash gap. Picture this, a sudden credit freeze, not unlike what we saw in March 2020 or during the 2008 liquidity crunch. Banks tighten overnight lending, credit lines get suspended without warning, property markets freeze because no one can get financing. In that 90-day window, what do you actually have access to? If the majority of your net worth is tied up in real estate equity, you have a serious problem. I want to be clear, I'm not anti-real estate. I hold real estate. But equity that you cannot access in a crisis is not a financial shield. It is a beautiful number on a spreadsheet that does absolutely nothing while the world is burning. What you need is what I call hyper-liquid capital, assets that can be moved, converted, or deployed in under 60 seconds. This includes cash equivalents, short-duration treasuries, and yes, for some portion, vetted digital equivalents that operate outside of traditional banking infrastructure. The question is not how much do you have. The question is how much of what you have can you actually reach when it matters most. If the answer makes you uncomfortable, good. That discomfort is data. Write it down. Give yourself a score of 0 to 10 on liquidity. Be honest. We will come back to that score. Question 2. Is your entire financial existence controlled by a single government? I want you to sit with that question without judgment, because most people, when they first hear it, interpret it as something extreme, like I'm suggesting you renounce your citizenship or move to a Swiss mountain. That's not what I'm talking about. What I'm talking about is the concept of geographic single point of failure. It's a term from systems engineering that describes the catastrophic vulnerability of any system that has only one critical node. If that node fails, the entire system fails. No redundancy, no backup, complete collapse. Your financial architecture has a geographic single point of failure if every meaningful asset you own, your business, your property, your savings, your investments, your legal entity structure, is subject to the laws of one jurisdiction, one country, one regulatory framework, one government that by 2027 could implement emergency wealth taxes under the cover of fiscal emergency. This is not a conspiracy theory. It is a policy option that multiple developed world governments have already modeled and discussed in academic and legislative settings. Wealth taxes, capital controls, emergency levies on high net worth individuals. These are not fringe ideas. They're tools that governments have used throughout history, and they use them in exactly the kind of global instability we are currently navigating. The fix is not complicated. It requires having at least one meaningful asset, not a symbolic one, a real one, that exists outside of your home jurisdiction's direct legal reach. This could be a foreign real estate position, an offshore business entity, assets held in a jurisdiction with strong rule of law and political neutrality, or a meaningful position in decentralized instruments that no single government can freeze or confiscate unilaterally. The question is not, are you wealthy? The question is, are you sovereign? Score yourself again, 0 to 10. How sovereign is your wealth from the decisions of a single government?
Question 3. How much of your wealth is managed by systems you do not understand and cannot override? We are living in the age of automation. AI-driven portfolio management, robo-advisors, algorithmic trading systems. These tools have democratized sophisticated financial strategies, and for most market conditions, they work extraordinarily well. The problem is the word most. Because financial history is not made during normal market conditions, it is made during unprecedented ones. And here is the uncomfortable truth about AI-driven trading systems. They are trained on historical data. When a genuinely novel market event occurs, what professionals call a flash crash driven by correlated AI behavior, these systems can behave in ways their creators never anticipated. They do not pause and think. They execute based on parameters. And when millions of AI systems, all trained on similar data, all react to the same trigger at the same microsecond, you get cascades that no single human can stop. Ask yourself, if your portfolio management system made a catastrophic series of trades during a 48-hour window, would you even know until it was over? And if you knew, could you intervene in time to matter? But here is the second dimension of this question that most people miss entirely. I'm not just talking about your investments, I'm talking about your income. How many of your income streams depend on a centralized platform, a platform that could change its monetization rules, its fee structure, or its access policy overnight without any obligation to you? YouTube, Amazon, Airbnb, Shopify, app stores, creator platforms, these are extraordinary wealth-building tools. I use them. But if your primary income depends entirely on the benevolence of a platform's current policy, you do not have an income stream. You have a permission slip, and permission can be revoked. Score yourself on dependency. 0 to 10. How much of your financial life is controlled by systems and platforms that you have no real authority over? Question 4. Is the skill that made you wealthy still worth what it was 2 years ago? This is the question that makes people the most uncomfortable, because it is deeply personal, and because the honest answer for a growing number of high-achieving professionals is no. Generative AI systems have not replaced human intelligence. They have replaced the transactional application of human intelligence. Mid-level analysis, report generation, code reviews, legal research, financial modeling, copywriting, design iteration. These were high-value skills that commanded high-value salaries and consulting fees. In many sectors, that era is over, not fading, over. The 2026 economy does not pay a premium for doing what a well-prompted AI can do in 12 seconds. It pays a premium for what AI cannot replicate. Genuine relationship capital, creative originality at the strategic level, the ability to navigate ambiguity and make consequential decisions with incomplete information, and the rare skill of building trust between human beings at scale. What I call the utility delta is the gap between what you currently offer the economy and what the 2026 economy actually requires to sustain high net worth status. If that gap is growing, if your primary skill is becoming more replicable, more commoditized, more automatable, then your income is on a slow, quiet trajectory downward, even if your current numbers look fine. This is not a reason for despair. It is a reason for urgency. The architects among us, the people who treat their career and skill development as a portfolio to actively manage, not a credential to rest on, these are the people who will not just survive the next 5 years, but will use them to build something extraordinary. What is your plan for skill set continuity? What are you building today that the 2030 economy will pay even more for? If you do not have a specific answer to that question, your score on this dimension is low, and that's fine. That's why you're here. Question 5, the one I told you to wait for. Question 5 is really not a question. It is a mirror. Take the 4 scores you have just given yourself, liquidity, sovereignty, dependency, and skill set continuity, and add them up. A perfect score is 40. Most people, when they go through this process honestly, and I mean genuinely honestly, not the version of honesty where you round up your answers because it's more comfortable, most people land between 16 and 26. That is not a failure. That is a starting point. And here is what I need you to understand about starting points. The only thing that determines whether they matter is what you do next. The people who look at a score of 18 and feel defeated, those people stay at 18. The people who look at a score of 18 and treat it as a blueprint for the next 12 months, those people are sitting on a completely different financial architecture by the time we have this conversation again a year from now. This audit was never about making you feel bad. It was about giving you a structural diagnosis because you cannot fix what you cannot see clearly. And now you can see it clearly. Here is your honest 5-point summary. 1. If your liquidity score is below 6, your first priority is restructuring your asset allocation to increase liquid or semi-liquid positions, even if that means giving up some yield in the short term. 2. If your sovereignty score is below 6, you need to begin, not plan to begin, actually begin establishing at least one meaningful asset outside your jurisdiction this year. 3. If your dependency score is below 6, you need to start building at least one income stream and one investment position that you own and control completely independent of any platform's goodwill. 4. If your skill set continuity is below 6, block time this week, not next month, this week, to identify the skill or relationship capital that you need to develop to remain indispensable in the 2028 economy. 5. If your overall score is below 24, do not wait for a crisis to motivate you. The crisis will not give you a warning. The audit just did. Now, here is where I tell you what comes next, and I want to be straightforward with you because that is the only way I know how to operate. This audit is 5 questions. The full 2026 Wealth Shield strategy is 47. Inside our exclusive WealthForge membership, I've built a complete module-by-module architecture program that takes you from wherever your audit score landed today to a fully designed, fully redundant financial structure, one that can withstand currency devaluation, jurisdictional risk, platform dependency, and skill set disruption simultaneously. This is not a course about investing. It is a structural blueprint. It treats your financial life the way an architect treats a building, with load calculations, redundancy systems, material science, and long-term structural integrity in mind. That's the difference between following the market and designing the moat.
The link to join is in the description below. I'll also put it in the first pinned comment.
When you join, the first thing you will receive is the complete 2026 Wealth Architecture Workbook, a 90-page document that takes every answer from this audit and gives you a specific, sequenced action plan for rebuilding each dimension of your financial structure from the ground up. If you are not ready to join today, I understand. Then do this. Subscribe and stay with me, because every week on this channel, we are going to go further into one of these dimensions. Next week, we are dismantling the myth that real estate equity is a safety net. You do not want to miss that one. Before you go, share this video with one person in your life who you genuinely care about, not because it helps me, though it does, but because there is a version of your friend, your partner, your sibling who is currently sitting on a score of 12 and has no idea. Send it to them. That is an act of genuine care. At WealthForge, we don't do what the crowd does. We don't follow trends and hope. We build, we design, we architect our future with clarity and precision. In a world of followers, we are the architects of our own freedom. I'll see you next week.